In 1905, the Guangli Mortgage and Remittance Company, started in Kuching, Sarawak by Chinese entrepreneur Liu Mingchuan, is where the bank got its start. In 1934, the business grew into Sarawak and Sabah, and it changed its name to Guangli Bank. And in 1960, Guangli Bank developed into a complete commercial bank. In 1982, the MUI Group bought Guangli Bank Berhad, and the next year, 1983, after MUI Group acquired Guangli Bank, they renamed it to Malayan United Bank Berhad. In 1989, the company name was changed to MUI Bank, and in 1994, the Hong Leong Group purchased MUI Bank Berhad and changed its name to Hong Leong Bank Berhad. In 2008, they entered China banking sector with a 20% stake in Bank of Chengdu. In 2009, expanded to Vietnam with HLPVN in Ho Chi Minh City. 2011, merged with Eon Bank Group, significantly growing its network. In 2013, established HLBCAM in Cambodia and representative office is Nanjing, China. In 2014, launched new internet banking, PEX payment, tablet app, and cardless withdrawal. 2015, introduced business internet banking, Apple Watch app. And in 2016, first Malaysian bank to enable 24/7 FFX payments. In 2017, introduced in branch iPad servicing, HLB Launchpad. In 2022 till present, currently the bank is Malaysian number 5 biggest banking group by asset, with more than 254.3 billion and the 4th biggest by market capitalization. The organizational chart start with Yang Berbahagia Tan Sri Kwek Ling Chan, the chairman, followed by Mr. Tan Kong Kon, the executive director, followed by non-executive director consists of 3, Miss Lau, Miss Chong, and Yang Berbahagia Dato' Man Haralal, anak lelaki Ratilal, and followed by Mr. Kim Lam, chief executive officer, and lastly Mr. Jack Lee Tiong, the secretary. These are the key financial indicators. First, gross loan growth decreased by 0.7%. Second, net interest margin decreased by 0.12%. Third, cost to income ratio increased by 1.2%. Fourth, gross impaired loan ratio decreased by 0.04%. Fifth, net credit cost lowered to negative 6 BPS. And sixth, the CASA mix increased by 1.7%, and lastly, return on equity, it stayed the same. Proceed with market positioning. Firstly, financial institution size and customer demographic. It is known as the 5th largest commercial bank in Malaysia. Second, SME banking leadership. It concentrates on providing financial service that meet the unique needs of SME. Third, Islamic banking. According to 2024 poll, 65% of Muslims in the country prefer banking that complies with Sharia law. And lastly, regional and global expansion. With its growing footprint in Singapore through Hong Leong Asia, it also active operation in China and Vietnam.
Now, let's take a look at some of the main products and services offered by Hong Leong Bank, starting with Pay and Save account. This account is one of Hong Leong Bank's popular offers, especially since it had also won an award for being the best deposit product in Malaysia. It provides multi-currency flexibility, meaning that customers can manage their finances in both MYR and 12 other major foreign currencies that is offered by Hong Leong Bank. It also has higher interest rates on everyday transactions such as deposits, bill payments, etc. However, a possible drawback is that it may incur hidden costs, particularly with the foreign currency conversions. Next, Hong Leong Bank also offers investment services to its customers. They have their own platform where customers can do their online trading through HLE broking platform. It provides low brokerage fees, real-time market information, and tools to check out future prices. However, the platform has its own issues such as crashing under heavy usage and certain key features missing such as real-time alerts. Lastly, for SMEs, Hong Leong Bank offers a range of services for them as the bank aims to support small and medium enterprises through loans, business accounts, and digital onboarding. This helps businesses with their basic financial needs. However, the product selection may seem limited and some SMEs may even find them to be a bit generic or not tailored to their specific industry requirements.
Moving on to the impact digitization on the bank's products and services, today people want things to be quick and easy. Instead of going to a bank, They prefer using mobile apps or websites to do their banking. For example, with pay and save accounts, people can earn better interest by doing more transactions online. This makes them want to use the app more often. For investments, customers now want real updates and low fees. They like to trade by themselves using online platforms. Also, customers don't stick to one bank anymore. If another bank or app is better or cheaper, they can easily switch with just a few taps. Banks are also changing the way they work. Thanks to technology, many tasks are now automated. This means banks don't need as many workers or big branches as before. But there are also problems. For example, some investment platforms crash when too many people use them at the same time. This shows banks need to improve their systems. Banks also use data to understand what customers need and to prevent fraud. Overall, digitization has made banks work faster, smarter, and more efficiently. Lastly, the home banking world has changed. Banks now compete with fintech companies. These are technology-based companies that also offer banking services. Because of this, banks have to work harder to stay competitive. The good news is, more people now have access to banking services, including small business in countryside areas. But with all these changes, rules and regulations also need to be updated to keep everything safe and fair for everyone.
Now let's move to the next part, which is the performance evaluation of Hong Leong Bank Berhad. First and foremost, let's look at profitability. This shows how well the bank is earning profit using its equity and assets. For return on equity, it increased from 10.9% in 2022, 11.8% in 2023, which means the bank did better in generating profit from shareholders' money. Then, for return on assets, it also went up from 1.34% to 1.43%. This means the bank used its total assets more efficiently to generate income. However, the spread dropped a bit from 2.14% to 1.98%. So even though profitability improved overall, the income from lending was slightly lower due to rising costs and lower interest rate. Next, for liquidity, this part tells us whether the bank can manage short-term cash needs. The loans to total assets ratio went down slightly from 66.2% to 65.3%, which means loans are still the main part of the bank's asset, but just a little lower. The liquid assets to total assets ratio also dropped a bit from 4.1% to 3.8%. This means the bank has slightly fewer liquid assets like cash or short-term investment. Overall, the bank liquidity is still stable and not a major concern.
Let's begin with section 3.3 asset quality. The first ratio we will look at is the non-performing loan or NPL ratio. The formula used is NPL divided by net loans times 100. In 2022, the result of NPL ratio was 0.50% and it increased slightly to 0.57% in 2023. This tells us that the more loans become impaired, which means slightly more customers failed to repay their loans. However, the ratio is still considered low and manageable, showing that the bank's credit risk is still under control. Next, we look at the loan of deposit ratio, which uses the formula of gross loans over total customer deposits multiplied by 100. In 2022, the ratio was 85.3% and it slightly decreased to 84.3% in 2023. This suggests that the bank maintained a healthy balance between how much they lend out the money they receive in deposits. A stable ratio like this reflects good liquidity management by the bank. Moving on, we have the deposit to shareholders fund ratio. The formula is total deposits divided by shareholders' equity. In 2022, the ratio was 6.3 times and it increased slightly to 6.4 times in 2023. This means that banks relied a bit more on customer deposits to fund their activities instead of shareholders' capital. A higher ratio can mean higher leverage, but in this case, the increase is very minimal and still reasonable. Now, let's proceed to section 3.4 capital adequacy. This part evaluates the bank's ability to withstand risk. First, we look at the capital to RWA ratio, which is calculated using Tier 1 plus Tier 2 capital over risk-weighted assets. This ratio increased slightly from 15.8% to 15.9%, indicating that the bank has maintained strong capital to absorb any potential losses or risk. Next, the core capital ratio uses only Tier 1 capital over RWA. This ratio declined from 13.0% to 12.8%. Although it dropped, the ratio is still well above regulatory requirement, showing that the bank still holds enough core capital to remain financially strong. Lastly, moving on to section 3.5 Management Soundness. In this section, we evaluate how efficiently the bank's management controls its operating costs. The main ratio used here is the administrative expenses to total expenditure ratio. In 2022, the ratio stood at 3.25% and it decreased to 2.96% in 2023. This decline shows that the bank has become more efficient in managing its administrative expenses. A lower ratio is a positive sign, as it means a smaller portion of total expenditure is being spent on admin costs, which may lead to better profitability and cost control. Overall, this improvement reflects sound and effective management practices within the bank during the year.
To conclude our presentation, Hon Leong Bank has shown itself to be a strong and reliable financial institution with a history dating back to 1905. Today, it stands as the fifth largest banking group in Malaysia by total assets. Its financial performance remains stable with improved return on equity and return on assets, indicating effective use of resources. Although there was a slight decline in net interest margin and liquidity, this remains within safe and manageable levels. The bank maintains strong asset quality with a low non-performing loan ratio, and its capital adequacy continues to exceed regulatory requirements, highlighting its ability to manage risk effectively. What sets Hon Leong Bank apart is its focus on efficiency and innovation. It continues to enhance digital services and expand across Asia, including markets like Vietnam and China. In summary, Hon Leong Bank is well positioned for future growth with a solid foundation, consistent performance, and modern banking strategies.